President Trump is angry that the ceasefire is not holding and threatening more strikes. But maybe saner heads inside the administration are like, hey, do we actually have enough rockets, and should we be continuing this? Probably not helping our price of oil. Not going to be great if oil is $4 a gallon or more towards November.
Yeah, I thought we had a bit of a window there for a while where it seems like there was at least an agreement to pause the blockades in the Straits of Hormuz while they were negotiating the broader issue. But remember, we were looking at this poly-market charts and thinking, man, these sides are so far apart on some of these key issues.
Yeah.
I don't know how exactly you get to an agreement. I know nobody wants to fight to continue, but in terms of the substance of what they're negotiating, they were very far apart on just the ownership of nuclear weapons, and it didn't seem like there was any imminent agreement. The price of oil did go up 100 on Thursday, but it was back below on Friday or Saturday, and now we're filming on Sunday, so every day is a little bit of a new thing.
Yeah, I don't think we're getting positive likelihood of Strait of Hormuz being open by the end of August, the end of September. By the end of the year, certainly seems like it's more than a 50% chance, but that's past the election, so kind of cutting it close there. I don't think that's great for the GOP if that continues.
This is the Little Orphan Annie War. It's always a day away. Tomorrow and tomorrow, always a day away.
Tomorrow, I'll stop firing rockets tomorrow. Google had their earnings call, and although the numbers were great, the stock went down because they're spending $200 billion
at least
on CapEx.
Yeah, I thought they had a great quarter. I think they are maybe a little bit on the back foot in terms of the guidance and how they're setting expectations, but let's just go through the quarter that they had. I mean, if you look at their stock price, it looks like they traded off by about 8 or 9% in the four days or so since they announced their earnings. You got to think they must have really missed on something bad. They're about 21, 22 times price earnings ratio right now, so a little bit more expensive.
Not too expensive.
But it doesn't seem, no, that's right in line with S&P 500. That doesn't seem like an expensive multiple. If you look at the highlights on their earnings, here's the summary. They had top line growing at 24% year over year. Their Q2 revenue within search is up 17%. This is their franchise that it really funds the business.
Yeah.
I think is the most under attack from AI, but they don't see any downside. If anything, it's accelerating. Their cloud business is 82%
through the roof.
$100 million revenue run rate now. If you look at the metrics on Gemini and YouTube, some of those ads are going to be AI powered, just monthly users and tokens per minute. They don't disclose revenues around Gemini, but all those numbers are extremely positive. And if you look at, just take out the Google cloud business for a second, this is what their services revenue looks like. It's up 15% year over year. Just the total top line, subscriptions, search, profit, going up to 40%.
Business looks really healthy.
There's no damage being done to their franchise by AI, and then the cloud business has been ripping along. This is both their top line and their bottom line for the cloud business. The last couple of quarters, you can see they've just been piling on more and more revenue. 24 billion last quarter, up from 20 the prior quarter before that, 18 before that, 15 before that, and they're now running at 30-40% margins here. There was nothing wrong in the print, and they should have stopped talking about 20 minutes into the earnings call, because once they got to the spend, then I think it all kind of went to hell. Yeah, this is their free cash flow chart. It's the first quarter since they went public, let me put it that way, that they had negative free cash flow. And if you don't know accounting, just as a reminder, you take your revenues, you take out your costs and expenses, that gives you operating cash flow. And then you deduct from that capital expenditures. And that gets you to a free cash flow measure. Then you add back non-cash items and expenses like stock comp and stuff like that. So you put it all together and they had their first ever negative quarter.
This is also despite Google raising money from equity sales, which should have reduced that CapEx spend hit, right?
No, I think that's a different part of that's investing cash flows. That should be separate from what they'll call free cash flow. So this would, if they can finance this with either, new bond sales, which they did, or new equity, that would be on a separate graph. So this is just take your...
That's what I'm saying, is that despite that, there's still negative cash flow.
Yes, despite that. So they're having to fund this off their balance sheet or with new money coming in. And then I think that's part of it. Is like, well, they're cash flow negative, so a lot of value-oriented investors who've been moving into this name, and they just joined the Dow Jones Industrial Average 30. So maybe there's some new investors that got a little bit freaked out by, hey, I don't understand this red. I don't understand what the red means. And then look at
Right.
the guidance. This is the expenditures on a quarterly basis. They've said we're going to spend 45 billion last quarter on CapEx. That was 35 billion the quarter before and 27 the quarter before that. So a massive increase in CapEx in a short amount of time. They had guided to 180 to 190 billion in CapEx on the last call, and now they're upping that, and they're saying we're going to spend even more in 2027. So that's kind of a negative. You have a business that a couple of years ago was spending 30 billion in CapEx a year, went up to 50 in 2024, up to 90 last year. Now we're talking 200, maybe on its way to 300. Like, who knows? They missed their guidance a little bit, and I don't think people know, quite what to do about it. And if you look at how the analysts treated it, I listened to CNBC and figured, hey, what is everyone saying about it? 10 analysts lowered their price targets. 3 of them increased it, and all the people who were lowering their price targets, whether it was Oppenheimer, whether it was D.A. Davidson, Piper Sandler, they're all saying capital program. Hey, we're concerned about margins and margin compression, the higher spending outlook. A couple of people referenced the headcount. So if you look at the headcount numbers, which they do provide on their earnings releases, they have gone from 187,000 employees to 198,000 employees. So it doesn't sound like they're gaining efficiency here. None of this is that surprising to me, to be honest. If you'd said before the start of the year, top line great, accelerating, growth, making money. This team, since the beginning of time, has been one of the most capital efficient spenders of all time in terms of corporate efficiency. Huge track record over 20 years, very capital disciplined. They're now betting behind something that's working. The only negative I'd say would be, well, if you told people one number and then surprised them with a new number, maybe that was, maybe that's a little bit of a misstep. But I would trust this team with their capital efficiency, and the fact that their revenues are growing and accelerating seems like there's something here that's really working.
Yeah, I guess we're going to see earnings announcements for several more of the Magnificent Seven over the next week or two. So we'll see numbers from Amazon, Apple, Meta, etc. in the next couple of weeks. Microsoft as well. I don't think we're going to see a different story. I think all of those folks are going to be spending more money on CapEx for AI data center build out. The trend overall here is that people are starting to pay more attention to the bottom line.
Yes.
And whether that's people spending money on tokens or people spending money on build outs, I think the market wants to see that that spend is rational and makes sense and is generating at least revenue, if not profits, down the road.
And I think even if you show revenue growing, which clearly Google Cloud has, and it's got 80% growth and it's $100 billion business, I think the fact that they guided to a lower number and are now surprising with a bigger number is just freaking people out. They're not trusting you right now with those kinds of big spend numbers. But I think Google is probably demonstrating real traction, real results. As long as they can do that, I think they'll be fine in the long run.
Crazy Fist. I'll come in with Crazy Fist. Huh? This is fine. He's not doing anything.
All right, well, switching over to another high flyer, SpaceX finally got their Starship rocket off the ground on Friday. They had been delaying a couple of test flights, but that finally went off. Possibly one of the only good news items for them. They've had some other rough stories happening. They have been on a losing streak. I guess this article is from Tuesday last week saying they broke that earnings streak, but it continued further down. So sort of the price has been coming down, I think, now to about $1.5 trillion. That's below the IPO offering. Kind of been a steady slide over the last month. We're going to see the earnings announcement here in, I guess, a week and a half. What do you think is going to happen in that earnings announcement, Aman? I'm guessing we'll see positive news on the revenue side, but we'll see how much that affects the stock price.
So the reason I think we've seen some loss in the stock price is they broke issue. So they issued at the issue price on the IPO was $135 a share. Their first tick was 150. They went as high as 225 a share, but those were all very small temporary movements. And then once you go below issue price, there's a lot of people who sell. And that's just an artifact of public markets is people go into the price target. And if you go below the price target, it just triggers selling. There's a lot of short interest in the stock right now. And then Tesla also has had a very soft couple of weeks. So they're down to 1.2 trillion market cap. And to the extent that Tesla goes down, there's some sympathy trade with SpaceX because a lot of people think Tesla and SpaceX may be one company someday, myself included. So I think there's just, negatives like that. I think on the earnings call, we'll probably see the best case would be reaffirm the rest of the year revenue guidance, put out some solid numbers or a deal with another hyperscaler. They've got deals with
Right.
Google, Anthropic, Reflection. So what does that look like for AI business? Fundamentals are unchanged, but the sentiment has gone up and down. So I think if you're them, you just deliver on the results. A couple more deals would help solidify that AI business. The stock price will take care of itself.
And then there's going to be some partial lockup that happens a few days after the earnings, right? Sometime in August, we should see partial
Yep.
lockup by some of the initial investors, maybe 20%.
On August 6th, right? That's the first 20%. If the price goes back above the IPO price, it could be another 10% lockup. Doesn't seem likely where the price is right now, but there'll be a 20% partial release. That'll be another factor to consider in the second half of August.